Hello everyone, welcome to Smart Investing. So today's video is based on the banking services sector. I'm just going over the market that is closed. Today is January 31st, 2024. My name is Albert, and again, I'm just reviewing a quick update on the overall market and what happened today. Biggest loser was from the banking sector, and the biggest loser was ticker symbol NYCB, with a loss of about 37.4%, something like that. Just looking at the NASDAQ today, lost 2.23. I love this chart. What a fake. Because within last year, especially last year of 2023, I've seen a lot of fakes where the market would act like this, right? Like it would stay flat or somewhat flat, It's like it's not a really big move. You have like these small moves here. Then very last minute, and then usually the last 2 hours, definitely the last hours, that's when it likes to move. And then for some reason, Wall Street or whoever the big buyers are, they like to do these big moves, and then all of a sudden they like to start getting the market going up and getting greedy. And that definitely happened last November and December. So we can see here how it finally dropped down, and then all of a sudden it starts going up. You have this little drop right here, then all of a sudden it spikes up from its previous highs since 11 o'clock, and definitely from 10 o'clock. And again, this is the very last 2 hours, definitely the last hour. So then all of a sudden, that did not work today. It just didn't work today. It dropped to a new low for the day. And then, okay, it starts to hold up. So not only did it go to the lower low for the day, it dropped even lower right before close. So even though, crap, let me look at the 1 day. I'm trying to zoom in on that. So there you go. Even though it tried to move up, it went boom. And then right there at the start of exactly pretty much the very last hour at 3 o'clock, just boom, just dropped. And again, it's try to spike up again. Similar to what was going on here. And then it went up, and then here you see the same thing. It started to go up, and then you start to see this one build a little bit of momentum, and then all of a sudden it drops. It holds up even there, but it just continued going lower. So you couldn't get through that. I mean, once you have this drop here, that was it. Once it hit that new lower low, that was it. That was the confirmation. And that was it. That's all she wrote. That's all she wrote for the last hour. So then you have, look at this. Big spike in volume. For the NASDAQ. I'm sure a lot of stocks were like that. Then we have here S&P 500. Same thing. Looks like it was going to reach a new high, and then boom, dropped right to neutral. And I didn't think nothing of it. I wasn't even expecting that, to be honest. But it's just nice to see that then boom, dropped to new lows. And that's all she wrote. That's it. Right after that, once you have this move, I mean, it's kind of hard to come back. But again, like I said, last year Wall Street was so super damn greedy that it's it's come back from that. Like it'll drop, and then by the end of the day, it'll come back and be more than what it's sold off of. It's nuts. But today we're finally seeing some normalcy, and it dropped down. So, anyways, I just wanted to mention that. That's what happened in the markets today. You can see clear selling off today because out of 6,000 stocks, you have, you know, about 4,500 of those stocks. A big majority said we're selling today. Market sentiment, that changes day to day. I don't care about that. Just the charting, the market overview, and the inflows and outflows. So, well, there you go. The advanced decliners, and then the charting. And obviously the heat map with those sectors. You can clearly see dark red, and you see these drops. A lot of red today. And we ended January with a lot of fake rallies. And then even those new highs, those are really fake rallies. And here's the real selling point. Usually 85% of the time, 80 to 85% of the time, if January does okay, throughout the whole year we'll do okay. I think we had so many fake rallies in January that it's tricky because I don't know who's gonna, the majority's gonna have to choose if they're smart enough. Do they know if in January they were fake rallies? Because all they were doing, again, the same as last year, pushing up the Magnificent Seven. So I don't know how you figure a rally from just pushing up 7 stocks and everything looks good when it's really not. So, anyways, that was that. And so I have 2 of the same stocks. I just wanted to mention that. I have AGM and AGM-A. So other than that, they're just different classes. So I'm just gonna start with AGM. I'm only gonna go over 2 stocks. So yeah, other than that, it's nice to see a sell-off. I know a lot of people are bullish, but you can only be bullish for so long. You know, get real. I mean, we've been bullish. I mean, the market has been bullish for like since 2020. With insane evaluations ever since 2020. So if you really want to be an elite investor, an elite trader, look at some charts from over a year. Look at some 2-year charts. Look at some 5-year charts, and tell me anything before 2020 hasn't been such a skyrocket as it has been the last 4 years. They've been insane. It's time for a break and to get some good yields, some cheaper stocks that are actually not insanely overpriced, and some affordable stocks. Because again, you can't be a millionaire overnight. So anyhow, ticker symbol AGM at $186. Volume is at 51,000. Market cap is at 2 billion. So as we can see here, earnings per share, it's pretty good. This is a pretty strong stock. Very strong stock from what I'm seeing. For it to be, this can be a banking stock. And if it is, it's because of farmers or agriculture. It's got to be in the name. So we have here Oh, okay. So they're corporate financial services. They're not really into the banking sector. I want to read the description. So they combine private capital and public sponsorship to serve a public purpose. See, agriculture finance. So they support farmers in rural areas. Yep. Agriculture. That's why. So basically, all these grasslands that are acres and acres of land. And, they use that for farming and ranching and all that. That's why. Makes a lot of sense. Renewable energy segment. Okay, I can see that happening. So no wonder they're so strong. So here we go. We have a dividend of 4.4. Let's look at some charting. So I like the fundamentals, just from the basic numbers that I see. Let's look at a 3 month chart. It's been going up. 1 year chart, it's been going up. 5 year chart, nice. I like what I see. Moving on to I don't really care about the news. I don't want to see words. I want to see pictures, numbers, and colors. Some real homework and some real detailed analysis and digging. So 3 analysts, I don't really care. Let's look at the quant ratings. So highest rating is momentum. Lowest rating is value. It's hard to believe this is that low, and the income is pretty low. I disagree with those two numbers. This one and this one. I think quant rating is a little off. Overall rating 4 out of 5. I guess I can agree with that. Or I wish I could give it 4.5 or close to a 5 out of 5. For comparing for this kind of sector, we're gonna look into some financials. So I like to look at legal accounting practices, not non general guidelines. I like to look at general guidelines. So they're beating estimates. It looks like they're beating estimates. They're just on an uptrend. Even then, estimates are also on an uptrend. I don't want to look at quarterly. I want to look at the. Hold on. Let me close this and then pull it up again. So we have the annual. It froze on me, so that's why I'm bringing it up. So let's look at the annual. We have, oh, that's pretty bad. Not even 1% for the return on assets. ROE, that seems to be more like it. 14.3%. I was gonna say the highest it has been its last 5 years. But again, 2023 has not been updated yet. And 2018 seems to be the highest return thus far. Earnings have grown significantly, which is good. I like to see that. Margins about the same. 2021 again was a skyrocket year. 2022 they're slightly going down. I like to see them work on the debt. The debt remains the same, and that is insanely high. Even to keep that for the past 5 years, that doesn't look good. So again, at first I thought they had a decent number, with 15 earnings, paying dividends, really low market cap, and potential to grow. But with that debt, yeah, that turns the tables totally upside down. So with that balance sheet, they look like a bank, actually. They almost look like a bank with these numbers. Uh Cash flow, if they're breaking even, then I don't know what to say. Excuse me. So we have operating cash flow 809. Then we have 3 billion. So 2.2 billion left. So yeah, they broke even. Like I said, around 2.2 for financing. Um, Really, all they have is cash flow from the net income. So what are they doing with their net income? That's the real question. But other than that, they're not paying their debts off. And as long as they don't keep going up. But again, it's still too high. So for this stock, I'm gonna have to say no to the watch list. Don't watch list this stock. It's too complicated. It seems, again, it looks like it has good numbers. I like that the growth rate and then the charting looks awesome. But again, with that debt, it kills the whole evaluation for it to be that high. Even if it was in the 70%, even low 80s, that could be manageable. But you're in the 90s, like, and then for the last 5 years, and then on top of that, hold up. Yeah, like you have this from year to year. Oh wait, this is from like 2011. Why? That's sad. If I see 2011, if I'm so anyhow, let me move on to the next one. So I said no for that one. Let's look at AGM-A and then we'll be finished soon. So volume is not even there. Pretty much it looks like the same numbers. The chart looks good. Looks like the same chart that we just saw. So analysis, momentum, income, it looks like the same numbers. Very similar numbers. Let's look at the gap. I call it gap, but it's really GAAP, general guidelines. So they're beating estimates. They're going above estimates. Here we go. We have 2022 results for these key indicators. I didn't get updates for the debt though. Net margins have dropped. So you mean to tell me since 2011 your debt has been over 90%? Not only for 5 years, longer than that. Just longer than that. And then your cash flow is breaking even on top of that. And then here's the crazy part. Your margins were good in 2020. Obviously good. But from 2018 to 19 they dropped. $178 million in net income, so slightly going up. But yeah, that's the sad part. That's the sad part, where not only is your debt the same, your net income was the same. Like the net income was the same from like 2014. This is nuts. Yeah, the net income was like the same for so many years. That's sad. Again, they're probably breaking even. Yeah, it's the same numbers. So again, different ticker symbols, same exact numbers. Just one is more active than the other. You can clearly see that ticker symbol AGM is more active, and then ticker symbol AGM dash A is you know, the same thing. They need to work on their debt and their net income. Like, yeah, I just don't see it happening. Like I said, they have to do that. Either their debt or their cash flow. That's what's killing them. And the return on assets are really low too. They need work with that. So thank you guys for watching. I'll see you guys in the next one, the next video again. I will be doing these next two stocks, ticker symbol SICP and XYF. So thank you guys for watching. I'll see you guys in the next one.